Alright, so welcome back, everybody. Yesterday we got to take a look at how to calculate employee taxes. Now, once we solve for the employee taxes, right? So we solved for how much their gross earnings was. We solved for how much their federal income tax withholdings based on the percentage method. And then we also got to take a look at calculating Social Security and Medicare, which is the FICA, right? Their federally insurance contribution act. And then lastly, we calculated what their checking is going to be. So of course, these are just the bare minimum of at least the federal part, but if there's state or if you offer any extra benefits, it's obviously going to be deductions towards your paycheck. So in this case, we don't offer any extra benefits, no 401k plan or no medical insurance. So in this case, again, we just calculate the bare minimum, and that's what exactly I want you to learn. All right, and plus Nevada does not have any state taxes. So here is the bare minimum of just calculating only federal. All right. Now we can go ahead and talk about employer taxes. So of course, after calculating employee taxes, you need to match them 100%, or excuse me, you need to take their earnings and you need to deposit in certain sections. So we're going to go ahead and start talking about employee company FICA. So just like how we calculated for our employee over there, we must match them 100%, as in if they put a portion to their Social Security and Medicare, we need to match them 100%. Okay, so as you can see, so we calculated the example from earlier. She earned a total of $686.25. So therefore, when we calculate our company FICA, or if you want to, you can have company Social Security and company Medicare. That way, you don't have to combine them. But just know that if you do, combine them, it's going to be 7.65% again, because Social Security is 6.2, and obviously your Medicare is 1.45, giving you a grand total of 7.65. So you can either add them together and mark them that way, or you can separate that if it just makes it more easy for you, so you don't have to add them up together. But for this example, we're not just only dealing with company FICA, we're dealing with other stuff too. So just so that you know where this number comes from. So by adding up, because we made our calculations of this, it's based on the gross earned wages. So in this case, we know for a fact that L earned $686.25. So therefore, we must calculate 6.2% of the 686, and then we also have to calculate a 1.45, which we've already calculated to solve for hers. So we just basically taking that information and transferring it over. So we know that $42.55 plus the additional $9.95 give us a total of $52.50. Okay. Okay, so then now the next one is going to talk about is going to be other employer taxes. So we have subject to pay into FUTA and SUTA. So FUTA is short for Federal Unemployment Tax Act. Okay, so this is the money that for when an employee works. It's supposed to be the money that is reserved for when you either get fired and you can claim unemployment. So one big mistake is a lot of people they get mad because they say that I pay into my my unemployment. You don't. You really don't. The company actually pays for you. So you want to be very careful when you say something like that. So you're not paying into your own unemployment, unless you're going into unless you live in other states. I know for a fact California does not um, pay into their unemployment either. It depends on what state you are in, but some states actually do have you pay into your unemployment. Okay, but just a little thing here, just a little FYI. Federal and state are two separate things that the employer is actually required to pay. So again, for the federal, it can range. It really depends on how many employees you have in your company, but it also depends on how much you owe. Okay, and like how when you schedule your payments to pay off this federal unemployment tax, how often do you have to pay? All right, that's all going to determine how much your percentage is worth. So most cases, smaller businesses start off with anywhere from 0.5% all the way up to 6%. 6% is the maximum that they could charge or they can claim. So in most cases, for this class, I just want to keep it really short and simple, just because we don't really know what the circumstances of the company is. We don't know what the filing status or how big the company is. So for this class, you're gonna learn that FUTA is gonna always be 6%. Okay. And then we're going to talk about the state unemployment taxes, SUTA for short. That one can be, it's also known as, here in Nevada, it's also known as the state unemployment insurance. Okay. So it depends on what state you belong to as well. California does have this, but not to the extent where it's this much percentage. But of course, we're here in Nevada. Nevada also has one too, and right now it's currently 3%, no matter what it is. But it can range as well to 0.25% to anywhere to 5.4%. Now, they do say that most businesses that are brand new or small businesses, right now their percentage is 3%. So for this, I'm going to have you learn that SUTA is going to be 3%. Okay, and same thing. It's going to be usually again, new businesses start off at 3%. So again, state unemployment and federal are two separate things. It depends on the state that you currently have your business in, and it will depend whether you need to pay the state unemployment or not. Okay. So those are two other factors. And of course, same thing here. It is based on their gross earnings. So if they made 30, if she made $686, right? So that means it's going to be 6% of that, and it's going to be 3% of that for the state. Okay. Now, again, the employee does not pay out of that. It's the employer. They have to pay these taxes for having employees. So they need to make sure that they have all of these necessary measurements to protect them when they do, they do lose their job. Okay. And then anything other than that, as far as other deductions, the only thing that the company would actually pay for is if they offer a 401k plan. So if they offer and they say, I'll match you up to this percentage, then that's agreement that you would have to pay. You would match them. But in this case, other ones that are more obvious or more prevalent is going to be workers' compensation. Okay? So workers' compensation, all right? It's basically a protection plan for the company because, again, when you get hurt on the job, right, the whole purpose of having a workers' compensation portion as part of the taxes for the company is so that they can protect themselves in case the employee turns around and sues the company. Okay, so they have this money, and this money is meant to either, pay for the medical bills, and also pay for any kind of sort of training for them so they can go back out into the work field. So we have to pay certain agencies to go ahead and file some kind of insurance to protect the company. So again, it's very important that you know this. And for this class, I'm going to say it's 1.36%. Of course, this rate it can be whatever rate it is. It doesn't have to be 1.36%, but usually it's anywhere from that sort of percentage. You don't pay too much into it, but if you think about it, if you have a number of a lot of employees, 2% of their paycheck is going to add up. And again, it is for the protection of the company. And especially if you calculate it based on that person's earnings, then that portion that you pay is going to dedicate directly to them. But of course, they have, they hire these worker compensation agencies. Not only do they pay them a big portion, it's just, again, to protect the company in case an employee does get injured on the job, and they don't turn around and sue the company. So in this case, it is also based on other things too. Okay. It is based on the gross earnings of the income. So again, if L earned $686, and it's going to be 1.36% of that. So here we're looking at other deductions or benefits as well that the employee does have to pay. So in case your employees call in sick, or holiday pay, or even sick pay, those are they're not taxes, but it's definitely extra compensation towards them. Fringe benefits, definitely something that the employee has to pay for as well. Okay, so any other things like that, and including medical insurance as well. If you are the kind of company that says the employee must pay a portion, you also have to pay a portion as well. Then you have to also pay into that tax. Okay. So then now that we have the main four that we're looking at is going to be FICA, FUTA, SUTA, and workers' compensation. So those are the bare minimum once again. So again, we're dealing with the federal. Again, FICA is federal, so it's mandatory that you calculate that. And of course, federal unemployment. Yes, it is important that you do pay, because if you don't, you're going to get a hefty fine. It is the Federal Unemployment Tax Act. You try to cheat them. So again, oftentimes, again, it's the company's responsibility to pay into the FUTA, also the state as well. And of course, worker compensation is optional, but definitely something that that the company should consider, especially if there's a possibility that an employee can get injured in the job. So these are the bare minimum 4 that you will see on the exam, as well as what I'm going to be testing you for. Okay, so here again, they're all based on the gross earnings, and so the $686.25, and each percentage is going to be based off of that. So again, we talked about the 7.65% for the company FICA. We talked about 6% to FUTA, 3% to SUTA, and 1.36% for workers' compensation. So we do that, and then we total all of those values up to get us a grand total of paying $123.60 for having L as an employee. Okay? So you can imagine, not only do I have to pay $686 towards my employee, I have to pay an additional $123. So that's almost $900 that you have to spend on having one employee. So that's why it's important that you understand and learn this concept, is because this is one of the biggest expenses that you can, biggest expenses that you can have, that's part of the business itself, is having employees. And if you throw in any additional benefits or anything like that, that is also gonna bring the price a lot higher. All right? Any questions so far? Federal is mandatory for all the states. It's mandated for every single state to do. It's federal. So most of your if you are claiming unemployment right now, it's part federal, part state. Say that again, Milo. Okay, so you want to be careful when you say that too, because the state may be paying you right now, but don't forget who's funding the state. It's coming from the federal, yes. So remember, state is below federal. So if the state doesn't have enough money, right, then the federal comes in and they distribute the money. Now, of course, the president Biden right now, he's the one, you know, that's giving. He's the one that's having he's the federal, right? He controls all the states, so he's pushing the money through, and the state is only doing whatever that they've distributed the budget for. So again, most companies, they have to pay into those things, but once that money runs out, so like in this case right now, the money is running out from each state. The state can't handle paying all these people that are unemployed, so that's where the federal has to step in. All right, and the federal, when they pay their unemployment tax, of course, not that money doesn't technically all go to unemployment. It goes pretty much for every other place, every other things too. But yes, for federal unemployment, when they pay it, when companies pay into it, it's getting collected as a collective pot for unemployment. Okay. So like right now, the state of Nevada, whoever's collecting unemployment, right? That money's gonna that when that money runs out, then it's coming from the state, but the federal is pushing money into the state. The federal government is the one that's pushing money to the state. So again, federal and state are two separate, right? The companies may pay into it, but once the state runs out of money, then the federal steps in. Okay, because like right now, it's a pandemic. It affects all the states. So right now, it's federally. It's right now. It's a federal problem versus a state problem. Okay, and of course, whoever has the most population, if the state runs out of money, then the federal has to do some budgeting and distribute the money accordingly by population. Okay, does that make sense? Okay. So once you've done that, okay, then there are rules to how you need to submit your federal taxes. So again, not only are you holding on to your employee taxes, you're responsible to pay into their Medicare and Social Security, because that's your obligation. You took it out of their paycheck, so therefore you are responsible to have to pay it. Now again, the making scheduled payments to these agencies, so far right now, they make it much more easy and convenient now. Instead of having to write a check every every payment, they're using their electronic federal tax um, uh, type of money. So now it's electronically transferred. So with that being able to receive the money immediately, that is going to be how they pay their taxes. Okay, everything's going to be electronically. Now, with that being said, it is very important that you do seek a professional tax accountant, because you do definitely need to set up those accounts and make sure that you set up your payments. Because again, if you've ever filled for a company, their job is to fill out their 940 and their 941 forms, okay? Because those are basically the payments to the government. It's going to be split between the federal income tax withholdings as well as the Medicare and Social Security for both ones. So make sure that you understand that if you are planning to run a business and have employees, that you are responsible to file the 940 and the 941 forms, okay? That is your taxes. And each form, right, depending on what kind of business you are, if you are a smaller business, most likely you can get away with owing or having to make payments either every quarterly or either every annually, so every year. Okay, but if you're a major corporation or a bigger company, it's possible that you may have to pay weekly, or you may have to pay monthly. But then again, most cases, most acceptable one that you can do is quarterly. That's the more common one that you will see. So again, and then especially with smaller companies, making sure that you are able to pay not only your employees on time, you also want to make sure that you pay the federal taxes on time. Because if you miss a payment, you can get a hefty fine, and I mean hefty. So if you owe somebody, you could end up paying additional $5,000 because you missed the payment. And that's a lot of money, especially if you already paying $100 or $200 extra dollars for one employee. Imagine having 20 employees and you owe the government about maybe $25,000, and you have to tack on an additional $5,000 for what? You already know that you have to make the payment. So you want to be very, very careful that you don't get in trouble with the government. So make sure that when you file your 940 and your 941s, make sure that you talk to a professional tax accountant, so someone that works at the IRS, to make sure that they set up the account to you. So if they do accept electronic funds transfers versus getting checks in the mail, then set that up, and also set up how often you need to pay. So again, the options are annually, quarterly, monthly, or even semi-weekly. Which in this case, it's every other week, or every other week. So again, if you ever seen the 1040, usually they say for most businesses that start off and paying their taxes for the first time, their due date is every January 31st. Okay. So again, chapter review. Here's all I want you to know. All I want you to know is these calculations right here, but here's a little few things that you need to know as well. Only your common law and your statutory employees are the only two people that are going to be on your payroll. Anybody else is going to be an expense. All right? Other than that, important forms, again, these are only important if you are planning to use them. I'm not going to test you on them. Okay, such as the employee identification number, the W-2 form, the W-4 form, 1099 if you're independent contractors, the 940 and the 941. Okay, and of course, if you want to learn more, all this stuff is on irs.gov/publication 15, which is all about employees and how to pay them. So this document right here is really interesting if you would like to read or learn about payroll. Okay, and then other things that you need to know is here for employee payroll. You need to file for their income taxes. You also need to do their their FICA, which is Social Security and Medicare. So right here down below, federal income tax withholdings is broken down into the percentage method, right? We learned 2 methods, but so far I only taught you one. But know that the other method exists, okay? And we're using the circular E table. Again, I will provide you the table for examples as well as exams, okay? So you do not need to worry about that. Okay, and then FICA tax. FICA tax, again, is going to be consisting of Social Security, and it's going to consist of Medicare. So again, Social Security is 6.2%, and there's a cap for it. It is $1,040 to $142,800 is the limit of the maximum Social Security you can claim or put into. For Medicare, there's absolutely nothing, no limit, and it is 1.45%. Okay. When we're dealing with our company, we have to deal with FICA, company FICA, as well as FUTA, SUTA, and workers' compensation. So again, FUTA and SUTA is 6% and 3%, and of course, workers' compensation in this class we're going to learn as 1.36%. So this one's a very it's calculation heavy, so make sure that you pay attention to that. Here is how you calculate the federal income tax withholding. So again, slight different changes in regards to this, but I will not test you on steps 2A or 2B, okay? And especially on step 5. I'm not going to have additional income or any additional deductions or any other extra withholdings, okay? So all those 3 things are going to be taken out. All I want you to know is how to calculate the earnings, how to calculate the federal, how to use the circular E table to figure out the percentage, and what happens if a person claims a dependent, okay? And of course, this is how you journalize it, okay? So for the employee, you're going to have either salaries and wages expense and the following down below, okay? And then for the employer, it's going to be payroll expense, okay? And listing all the other stuff below. Now remember, FITW, which is the federal income tax withholdings, Social Security and Medicare, FUTA, SUTA, and workers' compensation are all going to be liabilities because they are money that the company is going to be owing either to the government or to an agency. Okay? All right? So let's go ahead and take a look at our exercise right here. All right? So again, I will provide the information and tables for you. Okay? So you don't need to download that tax table unless you are interested in looking at all sorts and maybe want to even figure out your own payroll. Okay? So here we're going to be taking a look at Chapter 12 payroll exercises. So here is question number 1. All right, so here's a scenario. So this is now we're dealing with our employee. Okay? We have a man named Bob. He's married. He's a married man with 3 dependents, okay? He files as head of household, okay? And only has one primary job, okay? He earns $19.50 per hour, and he worked a total of 72 hours this pay period. The payroll period is bi-weekly, and so then now you're going to use the table down below to go ahead and answer the questions. So first things first, let's extract the information. we got Bob. He makes $19.50 an hour, and he's on a bi-weekly payroll, meaning he gets paid every 2 weeks. He claimed a total of 72 hours. So let's go ahead and solve for this down here. So first things first is solve for Bob's federal income tax withholdings. So first we got to start off by calculating how much total earned income he made. So what is his total earned income? Say that again. 1404?
1404.
Okay. So he earns a total of $1,404. Okay. Now, again, this is assuming he that's just his primary job. So he does. So number 2, there's no effect in there, no other extra withholdings or extra jobs or anything else. So we could go ahead and proceed to the next one. So the next one is now looking at the total amount that he's made. So this is the total taxable earnings that he is subject to be taxed at. So let's take a look at our table. What does he fall under? Which bracket would he fall under? Or section, I'm sorry. Or percentage?
1269 to 2808.
1269. So he is subject to be having to pay 12% tax. Again, he is filed as head of household. Okay, so these numbers are slightly different. Even though he's married, he claimed himself as head of household. So in this case, we highlight this section here because he made over $1,269. However, he did not make more than $2,808. He only made $1,404. So in this case, the government's going to automatically take away $54.60. He's going to, anything in excess is going to be 12%, and the government gets to let him keep $1,269. So if you remember from our lecture, how do we calculate our federal income tax withholdings? No, you don't take that out first.
1404 minus 1269.
Correct, right? We're going to subtract how much that the government gets to let us keep. Okay, so 1269. All right, and what's that total that I get here?
135.
135. Okay, so this is the amount in excess. This is going to be subject to the 12% that he is being taxed at. So we're going to calculate this 12% off of the amount of excess. So what is 12% of 135?
1620?
1620?
Yes.
1620. Okay? And then we're going to add, so now $16.20, and then now we're going to add what the government is going to take away from our paycheck regardless. So the 50 is a $54? $51.
54.
Oh wait, hold on.
5460.
$54.60. Okay, so in grand total, what is my current federal income tax withholdings? 70.80. Okay, now this is before claiming his dependents. So in this case, so let's see, how many dependents did he claim?
3.
He claimed 3. Okay. So if we go to the W-4 form, it says that each dependent is going to be considered $2,000 each. So times 3 gives you how much?
6,000.
$6,000, okay? And they tell you to divide that whole entire thing by the number of payments that he makes. So let's go ahead and divide this by the number of payments. He's on a bi-weekly payroll. So how many payments does he get?
26.
26. All right? So if he gets to take 26, then how much is it per paycheck?
230.77.
Okay? And this goes against this. So this gets subtracted out of this. So if it falls below 0, so in this case, our amount here is going to be the 70, 60, 70, 60 minus the 230.77. We get a negative number, correct? Negative how much?
Negative 160.17.
Okay. Once we reach this number, since this number is obviously less than 0, that means his total withholdings that he gets that he is going to be taxed at is going to be 0, because remember this isn't the new tax here. It's taking into effect that the dependents are not taking from your paycheck in the beginning. They're taking after the tax has been concluded. So in this case, he's going to be responsible for $0 because he claimed 3 children. Okay? So that's how you complete it. And then step 5, there's no additional withholdings. So in this case, he's subject to federal income tax worth $0. Okay?
I just have a question.
Yes.
Because it's 70-60 or 70-80? 70-60 minus 230. I asked him if it's 70-60. Where you find the 70-60?
70-60 is the is this number right here. How much he's supposed to be subject to be taken out from his from his paycheck. The federal income tax withholdings. That's what it's currently.
So it should be the 70-80.
70-80.
Oh, I'm sorry. 70-80. My bad. I see. Okay, there you go. 70-80. So 70-80. So what is this now?
Negative 159.97 now.
Okay, because this value is a negative number, it's obvious you can't take negative money away from a paycheck. So in this case, they say that if it's 0 or less, you're gonna claim it 0. Okay, because he decided to claim his children. Now that doesn't mean he's free from the government, because probably at the end of the tax year, he's probably going to have to pay back the government. Yep. So that's the rules. If you claim anything, you want to be very careful once again, because you may be subject to have to pay more. So you want to be very careful on how many dependents that you claim or how many withholdings you claim, because ultimately at the end of the day, you may have to end up paying versus receiving a tax refund. All right, it's a little FYI there. So in this case, he claimed he's going to be taking away $0 from his paycheck. Okay. So now we got to calculate his Social Security and his Medicare. So how much did he make? Okay. How much is Social Security? What percentage? 0.62. 0.062. All right. So how much is that?
8705.
8705. Okay. How much is how much is what percentage is Medicare? 1.45. Okay, which is if you do it in decimals, it's 0.0145. So how much is that?
2036.
2036. Okay. So now that we have that, let's go ahead and journalize his paycheck. Let's go ahead and write him a check. So what am I going to indicate first?
Salaries and wages.
Yes, good. Salaries and wages expense, okay? Again, this terminology can be anything. It could be gross wages, it could be whatever you want to call it. All right? I'm just keeping it sweet and simple and making sure that you understand salaries and wages expense. Straightforward. Okay? What are the items that I'm supposed to be owing the government?
Federal income tax payable.
Federal income tax withholding payable. Good. What else?
Social security.
Social security, right? You can either use social security payable or you can use OASDI, right? Old age survivors insurance and disability insurance. Okay. And what else?
Medicare.
Yes, Medicare. Or also known as HI. Whichever one makes it easier for you to remember. Most cases they use Social Security and Medicare. And then lastly, what's the last thing I have to do?
Checking.
I have to write him a check. Okay? I have to pay the guy. So let's go ahead and see. Let's look at this. So for the total amount of earnings, what was his gross wages?
1404.
1404 was his gross wages. Okay. Obviously, if you don't have any federal income tax withholdings, you don't need to place it here, but this is for practice purposes only, so you know how to journalize it. We claim 0. How much was the Social Security?
8705.
8705. And how much was Medicare?
2036.
2036. So how much is his total paycheck?
129609.
129609. Excellent. Okay, so he's still getting he still has to pay into his FICA, Social Security and Medicare, even though he claimed his children, so therefore he does not need to pay into his federal income tax withholdings. Okay, so now we're going to calculate the employer's standpoint. So again, solve for the company FICA, okay, Social Security and Medicare. So we know for a fact Social Security was 8705, right? And then we know that Medicare was $20.36. So in grand total, how much is the company FICA based on Bob's earnings?
10741.
107.41. All right. So that's how much company FICA, because Bob paid into it, so we have to match him 100. We have to match him 100%. So what about the federal unemployment tax? This is going to be based on Bob's earnings, so he earned a total of 1404. What percentage did I say that we're going to be teaching in this class only?
7.65%.
That's Medicare and Social Security combined.
6%.
6%. So how much is this? What is 6% of the 1404?
8420.
8420. Okay. And then what about the state? I don't know why I put state federal. It should have been just state. State unemployment. What percentage did I say in this class that we're going to use?
3%.
3%. Good. So what is my total here?
4212.
4212?
That's what I got.
Okay, so then recalculate the federal income, federal unemployment once again.
Yeah, the federal should be 24.
Oh, 24, my bad. So 8424, so therefore half of that is 4212. You could do it that way too. Okay? Lastly, solve for the workers' compensation. So, what is my workers' compensation going to look like? What percentage did I say where we're going to use?
$1.36.
Yes, 1.36. So 0.0136. So how much workers' compensation am I paying? Is the company paying for Bob?
1910.
1910. All right, so good. Now let's go ahead and solve how much taxes that the company has to pay for having Bob as an employee. So what is going to come first?
Tax.
Payroll
Yes.
tax.
Payroll tax expense. Okay? Everything else I'm going to owe to the government. So, what's the first thing I'm going to owe to the government?
FICA.
Yes. In this case, I'm going to name it as Company FICA. Okay? What else am I going to pay?
Unemployment tax.
Which one? Yes, FUTA. And don't forget SUTA. In this case, in the state of Nevada, it's SUI. Same thing in California. But you can also, it doesn't matter in this case. They all mean the same thing. SUTA. And what else?
Workers' comp.
Workers' comp. Alright? So how much was my FICA?
107.41.
107.41. How much was my FUTA? 84.24. Good. 84.24. How much was my SUTA?
4212.
And how much was my workers' compensation?
1910.
1910. So let's tally all this up to get our total payroll tax expense. Two, 528. I have to pay
252.87.
Oh, okay. I was like, 2,000. I know we're not gonna pay $2,000 for this employee. So see, now we ended up $252. So just having Bob. Not only do we have to pay $1,400 for just for him just earning that much money. We also have to pay an additional $250 for having him as an employee. So right there, he already average costs a lot of money. And think about it. This is one employee. All right. So let's go ahead and do example number 2. Here we have Susan. She is a single woman with 0 withholdings and has one primary job, okay? And she earns $25 per hour, and she worked a total of 38 hours this week. Okay, the payroll period is weekly. So she get paid every week. So here, what do we know about her? What do we know about Susan? She's single. She's single. And she's got 0 withholdings. So if she got 0 withholdings, then that means we don't take anything away from her. She also has one primary job. So that means section 2 of the W-4 doesn't matter. Okay? So let's go ahead and take a look here. Question number 9 says, solve for Susan's federal income tax withholdings. All right. So she makes how much?
25 an hour.
She makes $25 an hour. And how many hours did she claim, or did she work?
38.
She worked 38. So what is her total amount of earnings here? What's her gross earnings? Huh? 950. Sorry, I did not hear the 900. Okay? So that's her total gross earnings, right? She has no secondary job, so part 2 and part A and part B are eliminated. Okay? So therefore, this is how much tax she's going to be subject to pay. So as you can see, I provided the weekly table for you, single. Okay, so what percentage does she fall under? She falls under the 433, so that means she is going to be subject to 12% tax with additional of $19.20, but only in the circumstances that she made extra of after taking $433 out. So let's go ahead and solve that. So let's calculate how much money she's going to have in excess. So 950 minus 433. How much is that? 517. All right. So that's how much extra she made. Okay. So now that extra is subject to what percentage? What percentage is she subject to be taxed at? 12%. Okay, so she's going to be subject to 12%. How much is that going to be? $62.04. Okay, and then $62.04, and then what about
The 1920.
yes, we're gonna we're gonna add the 1920 to give a grand total of how much withholdings?
8124.
8124. And since she didn't claim anybody, she has no dependents. So therefore, question I think that's step 4 has been is 0. Step 5, no additional withholdings. So that means she's subject to have to pay $81.24 to tax, to her federal income tax withholdings. Okay. So now that she has the 8124 here, let's go ahead and solve for the rest. How much is her Social Security going to be?
$950 times 6.2, 58.90.
$58.90. What about her Social Security? How much Social Security is she gonna have to pay?
1377 or 1378.
Okay, good. All right. So those are the only three components here. So let's go ahead and journalize. So what comes first?
Salaries and wages.
Salaries and wages expense. Okay. What's the first thing that we have to place here?
Federal income tax.
Okay, FITW for sure. Payable. What else?
Social Security.
Social Security. And what else?
Medicare.
Medicare. And lastly, what does she get from us?
Check.
Yep, she gets a paycheck. So let's go ahead and calculate. So what was her total gross earnings? $950. How much was her federal income tax withholdings?
517.
517. No.
8124.
881.24. Correct. So 81.24. How much Social Security did she have to pay in? 58.90. And then how much Medicare? 1378. So therefore, what is her total paycheck going to be? $153.92. No,
Remember,
that's
796.08.
796.08.
Yep, I got 796.
Okay. Yep, that should be right because the paycheck is or the amount she earned was 950. She's subject to pay all these taxes. Okay. Now we're going to solve for the employer's standpoint. So again, based on Susan's earnings, how much company FICA is she going to be subject, or how much? Whew, let's ask that question again. Based on Susan's earning, how much is the company responsible for the Federal Insurance Contribution Act? So we had, what was Social Security for up here? 5890 plus the 1378. How much in total is the company FICA?
7268.
7268. Okay. How much is the federal unemployment tax? So she's made a total of $950 times 0.6%. How much is that? 57. And then solve for the state unemployment. So she's earned $950 times 0.3%. How much is 2850? Okay. And last but not least, what is the workers' compensation?
1292.
1092,
No, 12.
1292. Okay, 1292. All right, so let's go ahead and journalize the company's portion of the taxes. So, what is going to be the top journal or first account?
Payroll tax.
Payroll taxes. Payroll tax expense. Okay. So what am I gonna owe first?
FICA.
Yes. So company FICA. What else?
FUTA.
FUTA. What else?
SUDA.
SUDA, and last but not least,
Workers' comp.
workers comp. Okay. So let's start for the first one. How much is how much is the company FICA?
7268.
7268. How much is the FUTA?
57.
57. How much is SUDA?
2850.
And then lastly, what is workers' compensation?
1292.
1292. So in grand total, how much taxes are we paying for, Susan?
$171.10.
171.10. Yep.
Yep.
Okay, 171.10. And that's how you do payroll manually. As you can see, think about it. Manual payroll, this is how much you have to calculate for for this example, this is one employee and then this is another employee. Imagine working for a company and you have over 100 employees. Do you think manual payroll is the best way to do it? How many hours do you think you're going to spend having to look up every single table, look at all of their W-4 forms, and have to do all of this work? That's why they have they outsource to other payroll services. So again, you're gonna have to play that little option where what's going to benefit you more, spending all this time calculating manual payroll, or would it be better to just pay somebody off to just do the payroll for you? Okay. So good job, everybody.